The broadcast is now starting. All attendees are in listen-only mode.
Good evening, ladies and gentlemen, and we're 2 minutes past starting time, so it's good to see you all here, and hope you're ready for a pretty interesting webinar. Trevor's with us. Thank you. Thomas up there in Canada, Sue in Cairns, Peter Mack, the day trading guru. Oh, that's Peter King, I should be saying that about. Peter, yes, welcome. And here we are. Hello, John, all the Daniel Code attendees. 24 degrees up where Thomas lives in the frozen north. Had to rip off all coverings from our bodies to remain cool in true northwestern Canadian tradition. Good on you, mate. And Hank, thank you, down in the Hunter Valley, New South Wales. Loud and clear, says you can all hear me all right, which is grand. And Milton's with us. Mark L., he's going to be a great trader because he's very, very good at this stuff. He's done a tutorial, but he's too busy because he's been offered a new job. He'll get onto it soon, I'm sure. Keith R. over there, spoke to Keith recently, did a refresher on his tutorial. Joel's with us, good to have you. Janet up in Canada, she's a stalwart, been a Daniel Code member for many, many years and done three, maybe even 4 tutorials. She's a real stalwart. Hank down in Hank, the grandfather, I should say, down in Hunter Valley. Yeah, and terrific to have you there. Graham over in New Zealand. Good to have you with us, my friend. George, Ed is with us. Chun's with us up in Kuala Lumpur. Chase, the give up smoking man. Carol's with us. Carol, delighted to have you with us. We don't have enough ladies as members, and I'm always happy to see you join us. Albert, of course, he's Albert Z. He's a tutorial guy I spoke to recently, and Akshay, who's a long-term member of the Daniel Code, and we haven't seen Akshay for a while, but he's a pretty good trader. Okay, so let's move on, folks. We've got a whole lot to talk about today. Joel's in, Joel and Joyce. Lovely to have you with us, Joyce in particular. They're coming from Vero Beach in Florida, one of the beautiful places in the world. And delighted to have you both with us. Okay, so let's get moving, folks. So here we are, and what we're going to talk about now is equities are now a binary question. There's really not a lot of space left, I think, in equities for maybe. I think the bull market. We're in a bull market, no doubt about that. With this recent rally, quite stupendous, and I think the binary question is: does this go on, this bull market? And does this fulfill Frank DB's view on the fourth seal, which he came out with before the February pullback, the COVID-19 pullback? And he's maintaining that position that on his analysis of the long-term fourth seal charts, the probabilities for S&P is that we get a new higher high in 2021. But late 2021, it goes to custard. We'll see. And we'll be talking about that right now. Markets, as you know, are rational, orderly, sometimes predictable. And what we use at the Daniel Code is a set of proprietary ratios that control time and price in all time frames. Okay, so have a look at this, folks. This is the S&P since January 2019, and I'm going to show you where this model comes from. But basically, this is a variant of the time stops model that I showed you at a previous webinar. So you can see that in calendar 2019, the S&P under the Daniel Code rules for this longer-term trading made $26,500 profit, and margins then were somewhere around 13,000. They moved a bit during the year, and that gave us 204% profit on margin. Look what the market's done since then. From calendar 2020 to date, you can see where I put the break of the year, the start of the end of 2019, start of 2020. Have a look at it. $54,000 profit year to date. Margins presently 13,200 in S&P Emini. So this market has made something over 400% for us in the first 6 months of the year, which is extraordinary stuff. But there's no doubt that's a bull market. And in fact, in that whole 18 months since I put these results on here, you can see the biggest pullback in there is about $5,000, and that's without using any stops. Of course, if you use prudent stops, you can reduce that risk down to about $3,000 for your maximum drawdown. This is the tool that we use for our corporates to define trend, and this is what gives us those results that we were just talking about. The corporates are a lot more casual, or well, I should say, they're certainly not casual. They're quite intense. In fact, at times they're very intense, particularly when they're losing money. But we don't lose much money for them. The business is to make the money, which we do, I think, better than most. But this is a subset of some time stops that I showed you on a longer term chart. These are still daily bars, and I gave you a different view of this, probably two webinars ago. They're on the website if you want to look at them. And this doesn't take signals on bars the way we do with our normal daily trading. It takes its signals, entries and exits entirely on the market close. So it's certainly a more relaxed type of trading, but it's very, very good, as you can see. And if you're interested in that sort of trading, let me know, particularly if you've got money invested in funds that are making, like 4, 5, 6%, or even 15, 20%. Give your fund manager a ring and tell them to smarten up their performance. I am absolutely constantly amazed, and I've talked about this often, about how poor the managed funds, how poorly they perform. But anyway, the vast majority seems happy with them. So having a look at this, because, I think we're at a very critical stage in the equity market at the moment. You've seen this chart before, but basically this has fulfilled its requirement of a correction. You can see this is what I call a angle chart, and we've run it right from the great crash low in March 2009, and we stopped the extension of the Daniel Code trading channel in about April 2015, a bit earlier, probably March 2015. We haven't moved it since then, and the market has performed almost flawlessly based on the extensions of what the market had told us up to that stage. And you can see, if you look at the thicker blue line, the slightly thicker one, that's the median. In fact, I think that's the mean. Pretty much the same thing. And it's rallied 4 of the Daniel Code standard deviations. These are not your normal standard deviations. These are Daniel Code standard deviations, which uses one of our proprietary ratios of time and price, because whenever you have an angle has qualities of both time and price. So that's how you need to look at these charts. But it rallied up to 4 standard deviations above the mean almost exactly in February, and then it went down 5 standard deviations from the mean. So it's already met Frank Newton's rule of motion, that all objects in motion have a equal and opposite reaction. Well, this one's done a bit more. So it certainly met the criteria for an initial correction. But where are we now? We've had this stupendous rally, which is unprecedented, absolutely amazing, and we have to have a view of that shortly. Now, let's have a look what we would get on that. On the 6-day chart, here's the COVID-19 pullback from February 2000. It says 2020. You can see I was doing this early in the morning or very late at night. In fact, 2021, of course, to January the 16th, which was an important swing low. And it looks a bit sloppy because the nearest annual code retracement there is 221625. But remember, DC annual code target recognition is valid on the bar high low or on the close. And if we have a look at a close only chart, you can see that the close met that 221625 target almost exactly. Close enough for government business, as they used to say back in the day when government business required a high level of exactitude. I'm not sure that applies right now. So now go back and add the whole swing from the March 2009 low. So if we put on the Daniel code retracements from the March, this is the same thing to February 2020. It's actually February 2021. I do apologize. From that high all the way back, you see the Daniel code retracements there at 2181.75. So this whole swing, I know it's hard to believe, but it's the reality. This whole stupendous historic rally that's now gone for over 12 years from March 2009. This whole rally has always responded to these Daniel code ratios. And this dramatic pullback, a mini crash if you like, depending on what time frame you're looking at, went almost exactly to that Daniel code retracement number. So I've got it right at last. The major swing from February 2021, back to March 2009, that whole swing is now over 12 years. And that 44% ratio, which gave us support on the Daniel code ratios, gave us 2181.75. And the swing low after the February 21 COVID pullback is 2174. That gives us a variance against target of 7.75 points over the whole 12 years, which is amortized to 2.5 ticks per annum. Not points, ticks. 2.5 ticks variance over a 12-year period. It's quite extraordinary, isn't it? For those of you who have not seen the Daniel code before, that's no shock to people who know and trade the Daniel code, but working off a six-day chart, where every bar on this chart is created of 6 trading days. The fact that this market has continued in times of great drama and great stress to follow the Daniel code ratio so incredibly well is to most people extraordinary. In fact, no one's more surprised by what the Daniel code does than I am. It's a joy and a delight to do charts, which I do for you twice a week, update the members chart, just to see how markets turn and spin off these Daniel code numbers. If you haven't already seen that, you're most welcome to go and have a free trial of the Daniel code, or in fact, you don't even need a free trial. Go to www.thedanielcode.com and click on Chart Archives. In there, we've got every chart I've created for members since December 2008. And you'll see that you're hard-pressed to find a market, any market, and we trade 15 Forex pairs and about the same number of futures markets and commodities. You'll be hard-pressed to find a market that's turned anywhere except at the Daniel code numbers. Let's take that a bit further. This is a 3-day chart. The reason it's a 3-day chart is because time, all vibrations for all markets, W.D. Gann, the great broker who introduced brokers to the idea that if you teach your clients trading, you'll do very, very well. And Gann certainly was a great getter of money. He's a legendary character. Many years ago, I was at the CME and went down onto their trading floor, and there was a huge photo hanging up on the wall as you go down to the trading floor. Only one photo on that whole, and it's a massive building, and the photo was W.D. Gann. So he's a guy who's been held in high regard particularly by the broking industry for what he taught them. If Gann used to say, "If you are worthy, I will tell you the number," and if you were worthy, which usually turned out to be something that would cost you about 2 new Buicks back in the day, he would tell you the number if you are worthy, and the number was 7. At least that's what he'd tell you, and of course that's wrong. The vibration, the base vibration of all markets is 6. We can then move on using the Daniel Code ratios. We have the red and black numbers on there, which are retracements of the trend, and the blue lines, which are extensions of the trend. Extensions. Every swing creates its own new Daniel Code numbers, but they're all created only from the market's own time and price action. So as we know, the base vibration is of all markets is 6. That's why we use 6, 12, and 24-day charts. And in this case, a 3-day chart, because the instruction that comes with the Daniel Code is it shall be for a time, times, and an half. So if 6 is time, then 3 is an half. So that's makes it valid to use this chart for charting purposes. And you can see that the blue lines that's still on the chart, and there are other blue lines that the chart has gone through. Either it recognized it and gave you a little pullback, a reaction, or it ignored it entirely, which it does occasionally till it gets to the next one. But the number it's got to now is 3228.75. We're back to the 057 chart here. I should point out, in that initial slide I showed you with the trading for 2019 to 20 and 2021 on it, I was using an 067 chart. That's a back-adjusted chart the Trade Navigator produced, and the purpose of that is simply to get rid of the gaps on contract rollover. You don't need to concern yourself with it. It just gives you a truer picture, so you don't get too involved in what's happening with gaps. We're now back to the 057 contract, which is the main continuous contract that Trade Navigator produced. And you can see here that high is 3231 and a quarter, and the close is 3226.75, both seeking to find the blue line. If you take the average, because we know target recognition is valid on the bar high low or on the close, in this case the high or the close, you take both those numbers and average them, you've got a variance of 1 tick against the target, which tells you these blue lines are incredibly accurate. And it doesn't happen by accident, it happens all the time. So on a 3-day chart at least, we have a target that's been achieved precisely in exactly the way that we would expect the Daniel Code to find it. It will typically run exactly to the number, or if it goes past the number, sometimes it will correct to give you the close only on the number. In this case, you've not only had the high, you've had the close very, very close to the Daniel Code number. And as I've pointed out to you, if you average them both, you don't need to do that. We allow 1%, 0.1% variation. So both those numbers are well within that. But I wanted to show you another way of just proving the accuracy of their system. So it's found a significant high, and that has some meaning. Let's have a look what it is. So the market at the moment is struggling. It's going a bit sideways. A lot of the markets have been. And that's because the big players are searching for a narrative. They want a narrative. They're looking for a narrative of whether this bull market continues or whether it reverts into a bear market. So these are the main points that the bull market proponents are talking about. The Fed's providing massive and unprecedented support for business. If you don't follow this stuff, it's hard to understand just how much money they're letting loose into the market sector with QE, quantitative easing, which is at the moment QE infinity, I think, from the look of it. But they've even got the stage they're buying corporate bonds. They only have to be one level above junk. They're not what a prudent person would be recommending, but the Fed's buying them up. Quite extraordinary. So for those of a bull mind, the consumer base is still in place and financially, if not physically healthy, the demand from consumers will still be there. That's the thinking. The demand for goods and services that can be delivered remotely is very robust. We know that the way the FANGs have kept performing through this COVID-19 basis, they've actually made good money all the time. And basic transport like trucks, trains, aircraft, the belief is that they'll roar back once movement of people gets back to a normal situation. The basic belief always is that American exceptionalism means that US businesses will continue to invent, develop, and maintain their position as the world's great powerhouse of industry and agriculture, indeed. Trump is the best stock booster we've ever seen. I don't think there's any doubt about that. He has the US Fed on side. He has Mnuchin, who's his Treasury Secretary, who's ex-Goldman Sachs. He's the treasurer. He's the other side of the big triumvirate of Trump, Mnuchin, Jay Powell, the governor of the Fed. All their instincts are to boost US markets. The belief is that the US economy can continue with unlimited fiscal stimulus and that COVID-19 is contained. So that's pretty much the bull narrative. I'm just reading something, excuse me. Oh, this is from Thomas, who's he's a Canuck up in far north, in the north of Canada, and he says, thanks to my paysan, Janet. This would be Janet, who's been a long-term Daniel Code member, for her advice on Striker securities. Highly recommended for Canuck clients, Thomas. I divert for the moment, but there are some problems with interactive brokers. A lot of our Canadian clients have been using interactive brokers for some time. They were the only American US brokerage firm that could handle, was licensed to handle Canadian clients. Striker Securities, who we are partners with, they're the only recommended broker that we deal with. I've dealt with them for 15, 16, 17 years, something like that. I know William Galwas, the owner of the business, very well. I was a huge admirer of his father, John Galwas, who was an institution in the futures brokerage business. But anyway, Stryker are more than happy to deal with all of our clients, including in particular the Canuck clients who have not had that option before. You'll find their contact details at the Daniel Code website under contact us. Okay, so that's the narrative for the bull market. And it's pretty persuasive. But there's always another side of the story. And what's the bear market narrative? And I don't mean the crazies. Excuse me. I don't mean the end of the world crowd. But there is a strong argument for, in my view, a future bear market narrative shortly. US markets were at all-time highs before the COVID-19 outbreak, and valuations were at historically unsustainable levels. The forward valuations of these markets has been include not just the Nasdaq, as you would expect, but the S&P as well, and the Dow. those levels of PE, future PE earnings have been, they're historically unsustainable. The US economy was already showing signs of weakness before the February pullback. I'm not sure if that's necessarily right, but certainly there's been a lack of wage growth, which should come from ultimate demand, and maybe there's other things you can point to. There's certainly enough bears around who can find reasons for the end of the world almost on a daily basis. The main argument is the US Fed has totally misread the economy. Already it's used all of its tools to goose the markets. This includes historically low interest rates, which is incredible, isn't it? If you grew up in my era, where if you were ever fortunate enough to get a home mortgage at 9%, you thought you'd won the lottery. Look at it today. You just couldn't believe equity interest rates could have been so low and kept so low for so long. But historically low interest rates, no doubt the Fed, along with the other reserve banks, but the US Fed has a huge influence on all of the central banks around the world. They've done a terrific job in getting interest rates down, but the bear market says, how long can this go on? QE question mark, QE unlimited, I call it, and other support for US Treasuries. We've had a complete change around the last 4 or 5 years that debt, government debt in particular, used to be considered a bad thing because it tends to crowd out the private sector. Well, US Feds managed to broaden the tools that they use so much that they have a huge input on liquidity for the private sector. So, but that argument hasn't risen its head. Nobody seems to be concerned about debt. Obama administration practically doubled the U.S. debt, from inception to 8 years of the Obama administration, and everyone thought that was pretty shocking. This Trump administration has just blown the cork out of the bottle, and nobody seems to be concerned about it at all. But at some stage, the stimulus, the amount of money that's being used as debt in the US will become of concern, particularly to bond traders, and that's why the US Fed is so much on top of managing bond prices, and the US Treasury as well, of course. The bear market would say that damage from the COVID-19 has already been considerable, and that these effects have not been widely understood in the US. As you know, Trump's main approach to the COVID-19 is, it'll go away with the warm weather, or just don't worry about it. Hasn't been a great sign of statesman-like conduct. But the big point is, do you think that there is considerable, I mean, this COVID-19 damage is international. Do you think that damage that's been done by this is enough to upset, it's a secular argument, the US economy, which is the markets that largely that we're interested in? I know that's a bit of a parochial view, but where the US goes, there certainly go the others. And the best argument of all, but I think there's a constant argument, stupidity has trumped common sense. I'm going to take you in a moment to a story that was in the newspapers recently, a tragic story of a young man who got caught up with a firm called Robinhood, and they're an options trading website swished up with lots of internet tricks and stars and bubbles and glossy things spinning around and going whir. The argument is, and there's certainly grounds to confirm this, that there's a whole new generation of day traders trading primarily options through this company Robinhood, amongst others, and they offer this as a free website. So the who's paying the bill, because nothing in life is free. So it's free to the client, but it's getting paid for somewhere along the way. And their biggest argument is that Trump is a bad president who's failed to handle COVID-19. In other words, John Bolton has it right. And I put in here in block letters character because it's necessary to have a conversation about Trump, because the binary, it's either bull or it's bear. I think we're at that point. The binary argument actually swings on Trump, and it swings on his re-election. And we can probably go on and just show you how stupid and dangerous this day trading, options trading bull rally's been. And this was the article I was telling you about, a young gentleman, Alexander Keynes, 20 years old, struck by a train on Friday in Naperville, Illinois. In fact, he threw himself in front of the train. He left a suicide note explaining he'd been financially ruined. Screenshot of his Robinhood account shows negative balance of $750,000. The article said that was likely a temporary glitch before his options contract settled. I doubt that. Robinhood has attracted millions of young traders with little experience. It offers easy trading of stock options, which can be complex and risky. And of course, as the media does, it fails to highlight the main argument. It offers easy trading of stock options, which can be complex and risky, but hey, we'll lend you the money even if you haven't got it. In other words, this is ninja loans on options, if you like. And his cousin said, how is a 20-year-old with no income able to get assigned almost $1 million worth of leverage? The note reads, a painful lesson, Robinhood. So you can read about that there, and it's very like the ninja loans, isn't it? That in the mad end stages of the bull market, leading into 2007, 2008, early even, credit. The old saying was, if you can fog a mirror, you can get credit, and big credit. And we had those of you who saw The Big Short movie know that people, burlesque dancers, to put it politely, in LA were getting enough money to buy and own 5 homes. Of course, they never owned it. It was just easy mortgage money without a ninja. No income, no job, no problem. And this is what's been happening with the day trading section of the market. And it's a sad story. And it all goes to prove that this bull market has just been roaring. So the nature of this administration is pivotal to continuing monetary expansion, abundant liquidity for market players. The main players is Trump, there's Mnuchin, his Treasury Secretary, and Jay Powell, the governor of the Fed. They have gone so far out on a limb to extend financial resources to market players before COVID and double it since COVID. And there's no doubt they will go on doing more leading up to the November presidential election, because the belief is set in stone that set in stone that they'll go on doing that. They have the belief that the success of the market is likely to be Trump's main accomplishment, and appeal to brokers. Thomas has just sent me a note saying, reporting out of North Africa and southern India, locust swarms, and how that's likely to affect the grains and rough rice, famine and starvation. Terrible. Any truth to this? Yes, there is, Thomas, but having said that, there's usually a disaster on the subcontinent of one sort or another, and it is tragic. And I doubt if we're going to have a food problem, but, we'll find out. It won't affect the Western world, unfortunately. Fortunate for us, unfortunately, those sort of issues are really confined to India, other countries of that type. So the three guys running the US financial side, Trump, Mnuchin, and Powell, they're of one mind: spend, spend, spend. I mean, the amount of the US debt at the moment, the numbers have just made it totally irrelevant. You can't comprehend them. So what's the alternate? The alternate US government is Biden, which is really Obama version 2, if you like. Obama's people are hovering, have stayed, no doubt they've all stayed very, very involved in the process during Trump's first term. Some of them have done whatever they can to harm Trump's presidency, been successful in some ways. But the sort of concept that Biden's lost the plot to an extent, I'm sure that, to me at least, that appears to be quite true. But we know that the highlight of his life was the Obama presidency, and he has enormous respect for all those people, and you can expect that if Biden wins, he's going to populate the whole of the positions around the White House and senior government with ex-Obama people. So we don't have to guess what it's going to be like if Trump doesn't win. It's going to be Obama version 2. If Trump does win, then that enhances the Fourth Seal analysis from Frank DB, who is maintaining, as you'll see as we go along, he's still looking for, he's saying that the Fourth Seal charts that he's preparing are showing new highs in 2021 before some problems late in 21. If Biden wins, then the 2021 scenario is pulled forward. We're up not very far from new highs right now, but the problems afterwards will come a lot more quickly. Let me finish talking to you about what I want to say about Trump's character. I saw a movie during the week, which I've been avoiding. I really didn't want to watch it, and it's called Ride Like a Girl. And it's the story of a female jockey, an Australian female jockey, Michelle Payne, who was the first female jockey to win what we call the Melbourne Cup. It's a 2-mile race. It used to be historically the richest race in Australia. It's considered to be the toughest race, no doubt, and no woman had ever won it before, and very few have even ridden in it. She did. The story, let me go back, I didn't mean to take you there yet. I would want to talk about this issue of character. The story is about Michelle Payne and how she won the Melbourne Cup of 2015, first woman jockey ever to win the Melbourne Cup. Well, that's a story that the press focused on, was very interesting at the time. But the movie that they've made, called Ride Like a Girl, is a story not only of Michelle Payne, but of her family. I know her father, and I know one of her brothers and a couple of her sisters. And they're all wonderful people. In fact, they're New Zealanders. They came over here after a pretty good career in New Zealand. Paddy Payne, the father, was a good jockey, a very good trainer. Sold a horse to Sangster, those of you who remember those days, called a Paddy Boy. Raced in Australia as our Paddy Boy, and Sangster paid a small fortune for it, which allowed Paddy Payne to come to Australia, bring his family with him, buy a farm out in the country Victoria, our most southern state. Not really Tasmania is, but the big southern state, and a centre of racing. Paddy Payne and his wife Mary had 10 children, and the last of the children was this girl Michelle. In addition, one of his children, Stevie, had Down syndrome. The story, the movie, Ride Like a Girl, is to me a story about character. How Michelle's mother, Mary, died when she was 2 months old, and Paddy raised her on the bottle, and as he raised the rest of his children. 10 children, 8 of them became jockeys. And jockeys riding racehorses, let me tell you, is statistically the most dangerous sport in the world. Apart from having to deal with the loss of his wife Mary, some years later, one of his daughters was killed in a race accident. A horse fell and crushed her. Terrible story. And this, to me, this whole story of Ride Like a Girl is about character. And I know some of the Payne family. They're good, devout Christian people, hard workers, country people. And the way Paddy Payne has been able to raise this family, 8 of them have become jockeys, very successful. His son, Patrick, who's also was a very good jockey, indeed now a very good trainer. The girls, wonderful, wonderful riders and lovely, lovely people. It's a great story, and it's a story about character. And I think the problem for Trump is character. You saw the clip he staged of getting rid of all of the protesters with tear gas and rubber bullets, so that he could walk across from the White House to the Episcopal Church there and have his photo taken holding a Bible, which after a minute or two he did manage to get the right way up. But honestly, watching that, I was waiting for his hand to go up in flames. I mean, I know Trump is considered to be very good for the Christian base. He's certainly been marvelous for the Jewish people, with his son-in-law, who's a practicing Jew, of course, writing the new rules for so-called peace process in Palestine, which what came out was so biased it was totally ridiculous. But you know, I don't think Trump has a Christian bone in him. Jesus gave us a new commandment, which basically is, do unto others as you would have done to you, or love thy neighbor as yourself. Mainly means do treat other people the way that you'd wish to be treated. Well, if anyone can tell me that Trump treats other people the way he wants to be treated, well, I'll fly to the moon. It's just ridiculous. I think Trump is being seen as he's a great stock booster, no doubt about that. He's a great showman. His big rallies are fantastic. They may not be so fantastic if one of them causes another COVID breakout. But I don't think he's got much. I don't think he's got much else in there. There's no doubt he's a good real estate operator. He's certainly able to talk people into lending him a lot of money. But internationally, he's been a dud. He's got nothing out of the Chinese, nothing out of the Koreans. Caused a lot of angst everywhere. And why should I care about that? Well, I'm Australian. And Australia are United States, one of their longest and strongest military supporters. Whenever the US has gone to war, Australia's gone with them. Vietnam, Afghanistan, Syria, you think of it, and Iraq. Australia's, whenever it's been asked, it's been there with them. So the US is the major security partner for Australia. We live in a dangerous world at the other end of the Yellow Sea, which China now claims is the China Sea. In that, American and Australian naval vessels are conducting freedom of navigation patrols, which is code for saying we'll go within the boundaries within the marine exclusion zone for these coral platforms that have now become, the Chinese have turned them all into islands and militarized them. I've talked to you about that before. But Australia, for Australia, US is its most important strategic partner, obviously. And I have an interest in who the President of the United States is, and I'm not sure that Trump would be an entirely reliable ally. He changes his mind so often. I mean, I don't want to be unduly critical, but apart from his wonderful personal theatrical presence of the rallies and campaigning and boosting the market, I don't think there's much else between the ears. But nevertheless, that is my concern. I think Trump fails the test of character, and I think that means the odds are swinging away from what he was considered not so many months ago, which was a certainty, and I don't think he is. Anyway, we'll find out, won't we, as we go along. So let's move on. We're still trying full support from Canada. Thomas with like canoes and bow and arrow, good on you, mate. So this is the fourth seal line. For those of you who haven't seen this stuff before, the red line is the fourth seal. That is an angle, and as an angle, it has qualities of both time and price. And you can see it starts from before the April low. It starts actually from a low before the low. That's the catch call. Where this starts is actually a swing low because it has a higher bar either side. And this is the daily chart. From there, this is drawn up to the low of one of those internal bars in the late May correction. And the rule says, the Daniel Code rule says that a line drawn from a low before the low or a high before the high through the first reaction will forecast the next high. It's a bit more complicated than that, but you can see it's done it perfectly in this case. And we saw already that we have price. We have this whole rally has run into a Daniel Code price target perfectly. It's right on a fourth seal line perfectly. And it's also sitting on a 59 cycle from a low before the low. There's not one low before the low. There are many. It's not the low before the low. It's a low before the low. And you can see where the blue line, vertical line on this chart starts is a swing low because it has a higher bar on either side. You look at the bar immediately after it. I want to be careful because there always seems to be a number of people who are not Daniel Code members who want to write to me and tell me I'm wrong. We know we've obviously got a higher bar before it and after it. The reason we can count that as a higher bar is to be a higher bar, it only has to have any one of the following characteristics: either a higher high, which it doesn't have, or a higher low, which it doesn't have, or a close above the open. In other words, that's a up bar in momentum, and we classify that allows us to classify the bar before it as a swing low, and that also allowed us to find the high of this rally on a Daniel 59 cycle bar. So there's an awful lot of evidence, folks. I think that it's even possible that the high's in already, but we'll see as we go along. Let's have a look now. I want to talk to you a bit about the US dollar index. Dollar index has been the range. I mean, it's a big range. It goes from 88 to about 104, close enough. It's a very big range, the major range, and it's been in that range since 2014. Periodically, Trump has expressed the wish to have a lower dollar, and of course, Mnuchin would certainly support him in that. A weaker dollar makes exports more attractive and imports more expensive, and they're a natural result of having a low dollar policy. So the dollar hasn't moved down alarmingly. As you can see, it's still tracking along nicely in one of those Daniel Code trading channel bands where you have the dotted lines. It rallied up from the 50% low back in February 2018, and it's been sitting inside that band continuously all the time since June, July 2018, with a little breakout to the high, counter trend to the low. So You need always to be aware that the US dollar has all sorts of other impacts, particularly on commodities. This is just a broad brush view because this is the chart on the top is the Goldman Sachs Commodity Index. We're using a 6-day chart here. And the chart on the bottom is the US dollar index, which is the value of the US dollar against a basket of currencies, a number of currencies, and they're weighted. So it gives us a broad picture. If you look at some of the more detailed pictures of the currency, the energy and the commodity currencies in particular, Canada and Australia, they're very, very susceptible. The currencies are very, very susceptible to the US dollar's movement because it's such an important part of the market. But the basic picture, which you can see for yourselves quite easily, is that a strong dollar creates weak currencies, and a weak dollar, a weaker dollar strengthens currencies. And you can see currencies, commodities, I should say. Too many C words in there, isn't there? You can see that commodities have been having a pretty good rally for the last month and a half, and that has tied up with the weakness in the US dollar index. So you need to just be aware of that. We trade commodities all the time, and these movements in the dollar, if they become part of a trend, which they certainly are at the moment, they have an ongoing influence. But that, to me, seems to be weakening the commodity currencies. Australia and New Zealand and Canada in particular, and New Zealand to a much lesser extent, have all rallied very, very strongly recently. Okay, let's have a look what we're hearing from the Fourth Seal. This is Frank DB prepares the Fourth Seal for me. It's a wonderful story. Frank's a student of mine. He came to a Daniel Code tutorial in 2010 or 2011 in Taupo, New Zealand, where I was living at the time. He brought his fiancée with him, Anne. Lovely, lovely lady. They're now married, have 2 young children. And Frank's a farmer in Belgium. And he came to me in Taupo and said, I've never seen a financial chart in my life, and I don't know anything about it. But I love reading your articles, and I want you to teach me how to trade. So I did, and for a guy who's never seen a chart before, he went on to be an outstanding trader and one of our very, very best. And he had a particular interest in the Fourth Seal, which is a forecasting tool in time and in price. He took a particular interest in that. And strangely enough, the tutorial Frank came to see me for in Taupo was the first time I'd actually taught the Fourth Seal. And Frank got particularly interested in it and specialized in it to such an extent that he maintains the Fourth Seal charts for me and writes the commentary. And you can see he's saying here, you can read it all for yourself, but at the end of the first paragraph is last week. The next paragraph is this week. It comes out on Monday, incidentally. And Frank's timetable. He's a bitty farmer, as well as being a super trader, and in Belgium. And he can't get this report out to us until after the markets have opened on Monday. So for those of you who've commented on that, that's just the best that we can do that fits in with his other obligations. But here he is. Look at the last sentence. Longer term, we remain on schedule for new all-time highs in 2021. So Frank is certainly of that belief. And this is the 6-day chart. You can see the high we got just recently came 1 bar after a 59 cycle. Now, these time cycles, and we were talking about 6-day charts, 12-day charts, and 24-day charts, they are valid to plus or minus 1 period. And that's because the long-term counts, these are long wave counts, I hate using that word wave, they're long-term counts of markets. It's valid to start them on either a chart high-low or on the closing high or closing low if it's within 1 bar of the swing high, swing low. So that's where we have an inbuilt possible variance, plus or minus 1 bar, which is really not significant. And you can see this chart here got its 59 cycle. It put in its closing high on that 59 cycle, and it then rallied up to one of the minor retracements at 3238 and stopped almost exactly on it, just a handful of ticks away. Quite extraordinary, isn't it? These are very, very long-term charts, really, from a trading point of view. So my view is that may well be a high. I've put in Frank's comments on gold. I know that many of you are interested in gold. I don't know if our resident chairman of the gold bugs is here with us. Let me have a look. If he's turned up yet, sometimes he'll look at this on playback. I don't think he's with us yet. Plenty of others have joined us since we started, including Diane. Welcome, Diane. I always have to make a special welcome to ladies because we don't have very many lady members. We'd love to have more, so delighted to have you here. And Alan A. down in Florida has joined us as well. So is Adrian from South Australia, and a heap of others. Good to have you with us, all of you folks. Anyway, this is Frank's view of gold on the fourth seal, and it's been absolutely terrific commentary since then. This is the VIX, folks, just to give you a bit of perspective on what a big deal the February pullback was, and you can see the VIX is a market measure of volatility. It's an index. You can trade it on options. But you can see that this has really almost matched the top of the VIX back in 2008, when the 2007-2009 crash was starting to get serious. It's of that quality, isn't it? It's right up there. It's only a few ticks below the spike back in 2008. It's been very, very dramatic, and it's holding up at a high level. So there's certainly plenty of volatility still around. I owe all of you an apology from last week. When we got to Friday of last week, we'd run out of signals. I couldn't find any signals to post for the Friday's trading last week. So I put a post up saying that the reason we'd run out of signals is we'd run the board. We'd picked every turn in futures and Forex in the week leading up to previous February. And I said I will give you a detailed report later, which I didn't do. I'm still working on it. It takes a long time because it shouldn't, but it does, because I do everything manually and I do it all myself where the charts are concerned. But I want to show you, this happens to be a chart, one of the charts I was going to show you. You can see this gave us a blue line and TO3 sell right at that recent high in June, and nice little 3-day trade down, pretty dramatic stuff. This is another chart. This is a currency. This is dollar yen, and that too gave us a blue line and TO3 sell signal in that previous week, and gave us a nice $1,600 trade just in a few days. And all you had to do was know that there was a blue line and TO3 sell signal there. Put on your stop loss. Put on your sell, I should say. Use your stop loss the way I teach you. If you have any doubts, let me know. And we'll show the money just jumped in. So that's my apology for not having got it to you. I'm doing it at the moment, and it's running to about 10 or 12 pages. So I'll get that to you over the weekend. So we've gone a few minutes over time, folks. So I hope I haven't kept you waiting. For those of you who have not already done so, I do urge you to learn to trade. Now is a great time. We are going to have whatever else we have, up or down. We are going to continue to have very, very strong volatility volatility in these markets. And it's the volatility that the accuracy of the Daniel Code focuses on. So if you're interested in learning how to trade, do please let me know. I spend a considerable part of my time teaching people how to trade one-on-one, and I'll be happy to either talk to you about what it is you wish to get out of your trading, or to, in fact, teach you how to trade. So if you want to be a super trader, send me an email, please, jneedham@thedanielcode.com. Send me a phone number and let me know where you live so I don't call you in the middle of the night inadvertently, and I will give you a call to talk about your trading, what you'd like to do, and how I can help you. And in that case, we can get you into a tutorial, teach you everything there is to know about trading. My business my view of the business of trading is that the business of trading futures and forex is not to be right. You may think it is, but that's not the business. The business of trading is to make money, and that's what the Daniel Code does. It makes you a lot of money. It's pretty good. In fact, it's better than that. If you haven't already, folks, you're most welcome to have a free trial. Go to www.thedanielcode.com, click the register button. It'll just fly through and give you a 14-day free trial of everything that we do, the 6S trading, the daily trading on that, TO3, TO3 plus, Force Seal, the lot. Any issues you have, contact Terry at support@thedanielcode.com, and he will be happy to help you. This is my page of disclaimers, and basically it says, please do not try to trade with real money until you are satisfied that you've learned how to do it. I mean, that poor kid who killed himself up in Illinois jumped in front of the train because he lost money trading. It's easy to lose money, I promise you. Please do not trade or even try to trade using real money until you are confident that you actually know what you're doing, and you need to be a bit better than that. You actually need to be a pretty competent trader to beat the market. I think that's excuse me, that's us for the day. Actually, any thought on T-bonds? Government support of T-bonds, of treasuries generally, actually, is taking them pretty much out of market provenance at the moment. They are just at the moment getting a bit confused and a bit wishy-washy. They've been just poking along sideways, plus a bit of upward momentum for a few days. I don't think we have a current signal. We had a buy in 6S today. We got long T-bonds. And they're basically at the moment stuck in a fairly unexciting range, but no doubt that will end shortly. Well, that's it for me, folks. Thank you for being with us. I hope you enjoyed the webinar, and I'd love to hear from you. Let me know what we can do to help you with your trading, help you make money, help you make much more money, and do enjoy your weekend. Goodbye for now.